Three things.
Okay.
One is definitely weather. It's in there. You can feel it in the construction decline.
Okay.
You can feel it in the weak retail numbers. Energy. Obviously, that is having an impact on the job numbers, and I think that's
the manufacturing decline.
You think resource and mining was down 11K.
Right.
And I bet you the dollar is now having an effect too. That's the manufacturing effect. But there is. I don't think the world is now 135K. I think we're still well above 200K on a trend basis.
And to the
near term, 2015 is turning into quite the transition year again as we kind of unwind the former thinking and wind up the real thinking. And the real thinking is, down the line, as we see rising interest rates, is actually good for the stock market and good for the economy. So I think at the end of the last segment, you said bad news is going to transition to bad news and good news is going to transition to good news finally. And I think that's positive. I think the report is mostly disappointing. It's not bad news. It's certainly not surprising news, especially considering the tone of corporate America coming out of fourth quarter earnings and really what we've seen in terms of estimates coming down for the rest of the year. So corporate America is retrenching a little bit. We had bad weather in February, March. We know the story already, so not too surprising. But the key factor, we think, and we think you're doing a good job highlighting it, Joe, is that wages. This is all about wages, and wages are actually positive. And so we don't think that it takes the Fed off track from raising rates later this year.
This game's been played for a long, long time, more than just the last year. It's been decades that companies have guided lower. And that's why, ultimately, while everyone puts a lot of focus on the beat rate, I think it's more or less an irrelevant metric. What really matters is the path for earnings and revenues, not whether they were better or less than analysts expected. And I would just sort of jump off a point Josh made and reiterate that a lot of what's expected here in the first half of the year, and to some degree the back half of the year, is not only dollar related, but energy related. And I know this point's been made, but it bears repeating. If you exclude energy companies, S&P 500 earnings are going to be positive in the first and second quarter.